It's Mark Yegge here, wealth architect and lifestyle investor. Let's take your life to the next level. Welcome to the Wealth Architect Podcast.
Hey, everybody, it's Mark Yegge. Welcome to another Wealth Architect Podcast. Glad you're here. Today's going to be a quick one. It's the night after the election, and Donald Trump has basically won, and you can call it a sweep if you want, but looks like the House, looks like the Senate, looks like the presidency is all going to the Republican side. And that's going to impact our finances, right? And so one of the things I'm going to talk about is a couple of things that I really like as assets. So we have a few things going on that I kind of just want to opine on for a minute. You can take what you want from it, but it's going to revolve around three basic themes, okay? And the first theme is money printing. So this government has been printing money like it's a drunken sailor. I don't know how those two metaphors mix, but they do. So they're just printing money. What does that do? Well, the more money that you print, the less it's worth, right? The more of anything that you have, the less it's worth. I always look at it like this. Like if your lady gets, you give her a dozen roses, right? She's going to be like, oh, this is awesome. But then you give her a dozen roses the next day, she's going to be like, it's awesome. And then you give them to her for a week, great. But let's say you fill up the room with roses. Now the roses become way less valuable. In fact, they're a nuisance. And that's kind of what happens with the dollar. All you're doing is printing money, and you're making it less valuable. The more you have of something, the less valuable it is, right? Think about air. We breathe air, we value it, but there's tons of it. Nobody can charge for air. Nobody can really charge for water, although we pay for the convenience of having it in a bottle. So the more money that's printed, and we are at record, $35 trillion in debt, the more trouble we get in, right? Because the money becomes worth less. And you're seeing that. The value of the denominator, if you remember your algebra, the denominator is going down, which means that the numerator is going up, which means your prices are going up. So when you go to the store, when you go to buy a house, when you go to do anything, the prices are higher, except for maybe TVs, they're down. But I don't buy TVs every week. But food is up, energy is up, prices of hard goods. And that's the second thing I want to talk about is we have the Fed trying to lower rates, but we have the market that's raising rates. The market doesn't believe the Fed can lower rates. And so you're seeing the value of treasuries continue to drop. At the same time, the little subplot is that the dollar is the world's reserve currency, which means that years ago, we put in place that the world trades on the dollar. And because of this administration going in and having a war and creating wars with Russia and Ukraine, they basically put sanctions on Russia and they froze their assets. Well, what does that tell the rest of the world? The rest of the world went, wait a minute. If you're going to freeze assets in Russia because you don't like their foreign policy, you don't like they went to war with one of their neighbors, fine, whatever. Well, then would you do that to us? And the U.S. has a reputation of doing that to everybody else in the world. They have a reputation of, removing dictators from power, putting new regimes in, like they did in Ukraine, by the way, in 2012, I think it was. And, they replaced the regime with their own puppet regime, the Zelensky character. And so the rest of the world's like, wait a minute, I don't know if I want to trust the U.S. to be the world's reserve currency. I don't know if I want to trust the U.S. with our money because they could freeze it and take it, just like they did to Russia. And so Russia, they underestimated, right? The U.S. underestimated Russia. Russia was the strongest economy in the world last year because they have natural resources. They have oil. And so they were able to continue to fund their war and continue to fund their economy with oil. And the ruble didn't collapse like everybody thought it did. In fact, the ruble performed extremely well. And so what did that mean? Well, that meant that Russia could say, look, the U.S. isn't the only game in town anymore. Let's create our own block. And they created BRICS, okay? They officially created this Brazil, Russia, India, China, and there's like 39 other countries. It's grown a lot. That number is probably really, really small. And now they've got their own currency that they're going to be trading in. I have a feeling it's going to have something to do with cryptocurrency and maybe even Bitcoin, which is the third leg of something that I want to talk about here. And that's assets are going to be going up in value because the denominator of the US dollar is going down in value. We are behind, we're in a debt spiral, and we can't get out of it unless we have a drastic change in the budgeting, drastic change in the spending that we do as a country. And I don't know if we have the political will to do that. Maybe we do. But now you get into, so I believe that that's a macro trend. The Fed and assets are going to be going up. And I want to show you a chart of a couple of the assets that I really think are going to be big. And this first chart is going to be Tesla. Now, I want to show you Tesla. It's opened up. It's up $30 right now. It was up, 35, $40 a few minutes ago. This is the morning after the election. So Elon Musk is aligned with Trump. They want to do some cost cutting, which is great. How much cost cutting they'll be able to do, I'm not sure. But there's a whole alignment there. And if Trump is on the side of Elon, he's going to be on the side of all of his companies, which means SpaceX is going to continue to have hopefully have less regulation so they can continue to fund their Mars expeditions and all their SpaceX Starlink expeditions and things like that. But Tesla is going to be a big beneficiary. And I'm not going to go into too much on Tesla, but I will tell you, if you look at this chart, you can see a big gap away here on some significant volume. It's going to be big volume today, 207% right now. And so that gap away is strong. That's on the heels of this gap away on their earnings call. And so you've seen some energy in this. Let's look at the weekly. Now, I'm going to look at the weekly for a reason. And that is that it's now above this spot here, this 261 area. And now it's going into this area where it wants to get up into these little swing points. I don't even think that's a real swing point. I think the next swing point is $300. Okay. So it wants to run up there and test it. Now, the last time it tested on 723 million shares on a weekly. And this week it's only at 212 million shares. But maybe next week it could take a run at that. And if it has more shares, then I think it's going to this all-time high of 414 from like 3 years ago. Now, 3 years ago, Tesla, if you could look at 2021, Tesla was making $2.26 a share in earnings, up 201%. Okay. But now they're making $2.41 in earnings, and that's down. So that's telling you that Tesla is growing, but they had some earnings problems in the last couple of years. Okay. Their sales is like triple of what it was doing 3 years ago. So I always use this analogy. If you remember from 2010 to about 2016, 18, something like that, everybody was complaining about Amazon. Amazon's making all this revenue. Their revenue was growing top line, just like Tesla's is growing top line, but they weren't showing it on the bottom line. Well, Tesla has been very profitable, except for the last couple of years where they've had some declines in sales, and that's affected their margins and things like that. But by and large, their sales is increasing like crazy. They've sold 2 million cars now. They're the number one selling vehicle, and they weren't 3 years ago. This is a fundamentally different company. And they're 3 years into this, closer to being full self-driving, having that approved. And I don't know if you've seen the videos on that, but you sit back, don't touch the steering wheel, don't touch the brake pedal, don't touch anything. The car drives you from A to Z without having to even get an intervention. And the statistics are about 1 in 230,000 miles, a human being has an accident, but it's like 1.3 million miles, 1 in 1.3 million miles that the full self-driving supervised has an accident. So it's already 5 or 6 times better than a human driver. So that's going to help it get approval in some of these cities to start driving people around. They still have to figure out the liability things and all that. All right, so where am I going with all this? Well, I think Tesla, they have the number one selling car. They have the number one selling electric truck called the Cybertruck, and it's profitable. They figured out how to lower the costs on both of those vehicles. They have these cars that are coming out called cyber taxis. That's my name for them, but robo taxis, whatever. Cybercab, I think they are. And they drive themselves. There's no steering wheel. There's no brake pedals. The car just drives itself. And that's going to create like an Uber competitor without a driver. You don't have to pay the driver. In fact, you could take your Tesla with a driver, drive it around, or use full self-driving, park it in your driveway, and then the Tesla itself will back out of the driveway and go pick somebody up, take them to the destination, go pick somebody else up, take them to the destination, come back to your house and take you to the office in the morning. And they'll get to charge as if there were an Uber driver in there, and you get to share in some of the revenues. So that's like an Uber without a driver, and you get to take your car and turn it from 95% sitting there doing nothing to getting to use that car and make money on it. So that's a game changer. Let's go to the next thing. Robo-taxi, I talked about that. But robo-taxi and AI, all this AI stuff is going on. Tesla's got these cars that are out there driving. They got 2 million cars out there driving with all these cameras absorbing huge amounts of data. Nobody else has the kind of AI data that Tesla has right now. And that's going to be a valuable commodity to be able to license to other companies that are going to need it. Then let's go with the AI thing. I don't know if you saw that event on October 10th, but you should go watch the video of it. The cars that drove people around by themselves. And then they had these robots that walked in, they'd give you a high five, they'd serve you a drink, give you a gift, play rock, paper, scissors with you and have a conversation. Now, there was somebody behind those robots, but the fact that these things can even stand up is unbelievable. What does that mean? Well, that means Elon Musk is predicting that the robots that they have called Optimus are going to be the biggest revenue maker for Tesla. It's not the cars. It's nothing else that I'm talking about. It's going to be these robots. So the idea is that you could teach a robot to do anything that you could do, fold your laundry, clean your house, mow your lawn, whatever. And people are going to want to have these robots. And it's not next year. It's going to be in a couple of years or a few years, whatever. But it's going to be the biggest driver of Tesla. So now you've got the cars. You've got the AI. You've got these robots, right? It's actually a very futuristic company. And when I look back at the stock chart, and I look for the last 3 years at where this has been, it's been a really tough ride on Tesla. But now I think we can get a run like that, where we haven't had one before, and we can get a nice run through the $400 level. It's got to get to 300 first, and it's a ways away from that, but it's got to get to 300, and then we're going to 400. And I think this company in 5-10 years is going to be a $2,500 company. So that's one thing that I wanted to kind of bring to support my thesis here of buy assets, but buy good quality assets. And I think a profitable company that's got 30-something billion dollars in cash is doing something right. The next thing I want to show you is my other theme that I talk about on this channel a lot, and that is this thing called Bitcoin. Now, Bitcoin during the election last night hit $75,000, in value. Okay, so I'll go up this 24-hour chart. You can see at about 1:25 a.m. it hit 75,358. Now I'm going to zoom out a little bit and show you what this stock is. This trade has done in this year. I mean, that's a good looking chart, isn't it, for a year, right? Where you've gone from 60 to 75,000. But if I zoom out even farther, I'm sorry, that's a monthly. I'm going to zoom out to the yearly, and you've gone from 40,000 to about 75,000. How about if I put it on a 5-year? Now it's crazy. Okay. Now you're talking about something that was down here at 9,000. And it's down now up to 8 times that value at 73,000 if you use the denominator as the US dollar. And other currencies, it's even better. So these are two of the assets that I think are the future. Donald Trump has said he's a supporter of cryptocurrency. He's got his own coin called the Liberty coin, I think, which is a kind of what do they call that? It's like a tether. It's a stable coin. It's tied to the dollar. And then he's a big believer in Bitcoin. Now, maybe he starts to tie the budget or the reserves of the U.S. economy to Bitcoin or some cryptocurrency. If he does, oh my God, game over, right? So I look at these macro trends alongside the election as ways that you can profit for the future. Now, I'm not saying I know if it's going up or down. I'm just saying you should do your research based on what I'm talking about. And I think whether you buy real estate, that's a great asset. Gold is a great asset. Silver is a great asset. Bitcoin is a great asset. I'm not sure about all the other cryptocurrencies because I don't believe in most of them. Tesla is a great asset. The U.S. economy, if you believe in what's going on, will be revitalized under this administration, I believe. And if so, the less regulation you have, the more that our ingenuity can flourish as Americans. If you're an American watching this, I think there's a lot of things that are lining up to go in the right direction. Will they go in the right direction? I'm not sure. I'm giving you a jumping off point to take a look at that for your own personal finances. But do your research. I don't have all the answers. I'm just a bald guy on the internet trying to give you some ideas. Listen, thanks for joining me on the Wealth Architect podcast. I hope to see you on the next edition. If you want to check out my other channel, I have a channel on YouTube called @coveredcalls, where I teach people how to make safe, reliable income in the market by buying a stock like Tesla and selling calls against it, creating income every week. And so if that's interesting for you, go check out my other channel, at Covered Calls. You can put my name in there, and at Covered Calls, it should come up. But hope to see you over there. You can subscribe this channel, subscribe that channel. Like me wherever you are, and I appreciate your support. I'll see you next time on the Wealth Architect Podcast. Take care.
You've been listening to the Wealth Architect Podcast with Mark Yegge. Follow us on iTunes, Spotify, or wherever you get your podcasts. Like and subscribe on YouTube. Share and tell your friends. See you soon.